or services. And then you should also include the economic factors affecting the market and your doing business. And lastly, you should also take a look at the technological changes affecting your market in terms of their lifestyle, their preferences, their choices, and the processes of your business from supplier to the delivery of product or service to the customer. Under objectives, you are going to state there your goals for the year. And to get this goal, to determine or to define these goals, there are 4 areas. State in terms of products if it is an existing product or you're introducing a new product. Markets if it is an existing market or you are entering a new market. Processes if the business will be using the same existing processes or a new method of value creation is going to be used. Under employees, you also determine the kind of skills that your employees must have or be trained in order to meet your goals for the year. The business financial model explains how money works within the business. Financial planning involves managing the model forward, not just letting it happen. There are 5 elements in a business financial model: your CAPEX, capital expense; OPEX, your operations expense. These 2 creates your capacity, the extent, the leverage of what your business or your organization can do. And then another element here is your price structures and the expected returns. Let me show you an overview of a financial plan. Financial plan shows your sources of funds and how these funds are going to be used. The sources of funds come from 3 sources. Share of capital if you have a partner. You might have an agreement sharing of 60-40 or 50-50 sharing of capital contribution, or you have a capital that you borrowed from a bank, that's your loan capital. And if your business is not new, already existing, another source of your funds is the retained profit. Below the sources of funds are declarations or report or plan of how the funds are going to be used. Funds for fixed assets and funds for working capital. This is the basic overview of what's inside the financial plan. A financial plan is a representation of your business plan in money terms. Under this plan, it should show your cost estimates, the revenue estimates as created by the amount of money that was used to create and sell your product. It should also show the month-on-month state of your business in money terms, showing profitability and cash flow. You should show also how the money is allocated or distributed in the creation and selling of your product. So we have here capital budget for fixed assets, sales budget for how you're going to sell and deliver the goods to your customers, revenue budget, the cost of producing your product or service, and other attributable costs. In accounting, there is this rule on how to record or report how the funds where or are to be used. There are 2 types of declaring the use of funds: expenditures or expenses. If the cost benefits future periods more than 1 year, it is an expenditure. If not, it is an expense of a financial plan. In this sample, there are tables for assumptions of cost, assumptions of financing, the sources of your funds, and then the revenue assumptions and key values that affect your business, such as interest rates, interest on loan. In this sample, there is a table for revenues, for expenses, as they are important in showing profit or profitability. And then below is a table for cash flow. When you are evaluating your business plan or financial plan, you go back to these areas of consideration. We go to planning for cash. Without cash, you cannot pay your materials, labor, or services. Profit is not the same as cash. The business graveyard is plenty of successful businesses which run out of cash. So be warned. What to do? You must plan the cash as well as the profit. Just planning for profit is not good enough. Many profitable businesses, as I have said, run out of cash. Ends up closing. The cash plan. The cash flow forecast is an integral part of budgeting. Never approve a budget plan unless a cash flow forecast has been reviewed and is acceptable. We are about to end our presentation at this point. So we raise the question again. Financial planning for your business, is it necessary? Yes. So there is importance in assessing your plan, evaluating the outcome, whether the plan enables the business to meet its financial responsibilities to the owners, to lenders, to employees, and to customers. Will the result enable the business to progress towards its strategic aims? If not, go back to the drawing board. Remember, this is a plan. You have to write it down. If the expected outcome is unsatisfactory, you have the chance to redirect the business. This is the beauty of having a financial business plan before it is too late. This is the end of our presentation. I would like to thank everyone for sitting with us, and then we encourage everyone to pursue your dreams. Thank you.